Welcome back to Investing Talk Podcast. We're thrilled to have you join us today. Today, we're going to really break down what's coming up for Accenture. They're a major player, obviously, in IT services and consulting, and they're preparing to release their latest earnings. So we'll explore what analysts are expecting, how the company has performed historically, and, what factors could really move the stock. Our mission is to equip you with the most important insights so you can feel truly informed about this event. And as we get started, if you find value in our insights and want to stay ahead of the curve, remember to subscribe, like, and comment. Also, if you're feeling generous, maybe consider buying us a coffee. And definitely, if there's a specific company you'd like us to look into, please leave a comment below after our discussion today. Okay, let's unpack this for Accenture. When exactly is this report coming out, and what are the key numbers everyone is watching?
Right. So the critical date here, mark this down, is September 25, 2025. That's before the market open. That's the key time. And looking at the analyst consensus, let's see. The mean of 13 analysts points to revenue of about $17.34 billion.
Okay, $17.34 billion.
Yep. And for earnings per share, the consensus is standing at $2.98. So those are really the benchmarks. The numbers Accenture will be measured against right out of the gate.
That's clear. And how does this compare to what Accenture itself has been guiding towards? Do we have any of those whisper numbers floating around? The ones that sometimes add that extra layer of anticipation.
Yeah, good question. It's interesting, actually. For this report, there's no widely circulated whisper number in the primary research we looked at, which is, well, a bit unusual for a company this size. However, Accenture did reaffirm its full year 2025 guidance back on June 20th. They set an EPS target of $12.77 to $12.89.
Right.
And revenue guidance between $68.8 billion and $69.4 billion. And importantly, both of those ranges are generally in line with the consensus estimates we just talked about.
So no big disconnect between the company and the analysts.
Seems that way. Suggests a degree of stability, perhaps, in their own outlook, matching the street's view.
Okay, so knowing what to expect is one thing, but how has Accenture performed in the past, especially around earnings time? Do they have a track record of meeting or beating expectations?
Yes, and this raises an important point. Accenture's history here is actually quite consistent and, frankly, pretty impressive. In the last 4 quarters, the company has actually beaten the EPS consensus every single time.
Every time, wow.
Yep. For instance, in Q3 2025, they reported $3.49 against the $3 per 32 token cent consensus. That's a, 17-cent beat?
Nice.
And Q2 2025, it was $2.96 versus $2.88, an 8-cent beat there, and so on. They've consistently delivered these positive surprises, ranging from about plus 6 cents to plus 17 cents per share.
That's an impressive streak. So if they've consistently beaten estimates, how has the stock typically reacted right after these reports? Does it see big swings, or is it more measured?
Well, if we connect this to the bigger picture, Accenture typically shows moderate volatility post-earnings. While the exact percentages aren't given for every single instance in our sources, prior reports suggest price movements often fall, within maybe a 3 to 6% range.
Okay, so not usually those massive double-digit jumps or drops.
Exactly. It's not usually prone to extreme swings, more tempered.
And beyond just the headline numbers, what were the underlying trends driving these past performances? What key metrics have been standing out that kind of explain that consistency?
What's fascinating here, if you dig a bit deeper, is that revenue growth in recent quarters has been in the mid-single digits. Pretty stable quarter over quarter.
Okay.
But crucially, their margins and, importantly, their bookings, that's future revenue,
Okay.
basically have remained resilient. And this is even despite what's been, a pretty cautious enterprise spending environment globally.
Right, we hear that a lot. Caution.
Exactly. So this resilience really indicates strong operational execution on their part. Managing costs, closing deals.
That gives us a great historical context. Now, let's look at the immediate past, the quarter leading up to this report. Were there any significant company-specific catalysts? Any major news that could impact these results? Mergers, big client wins or losses?
From the sources we reviewed, there haven't been any major M&A deals or divestitures announced during this specific period. The company has really continued its strong emphasis on AI and digital transformation initiatives. That's a very consistent theme for them.
Right. AI is everywhere.
It is. And also, importantly, there haven't been any reported large-scale client losses or significant negative headlines. So it suggests a relatively stable quarter on the company-specific front.
Okay, so no big internal shakeups, seemingly. How about the broader sector, then? What are the prevailing macroeconomic trends influencing the IT services market right now that could play into Accenture's performance?
Yeah, this raises an important question about the external environment. You're right, they don't operate in a vacuum. The IT services sector, generally, it remains challenged by enterprise tech spending caution. We touched on that.
Yeah.
This is particularly evident in areas like consulting and maybe more discretionary IT projects. Clients are just being more conservative with those bigger spends.
Makes sense. Uncertainty breeds caution.
It does. However, there's a definite silver lining here. Digital, cloud, and especially AI services. These continue to be pretty robust growth drivers. Companies see them as essential.
Almost like must-haves now.
Kind of, yeah, for future competitiveness. And recent analyst commentary reflects this duality. You see mostly buy or overweight ratings for Accenture, citing their strong pipeline in cloud and AI, but also, cautioning about that near-term consulting demand. It's a mixed bag.
Okay, so a push and pull between their strengths and the market headwinds. Given all these factors, what are the options markets telling us? What are they pricing in for the anticipated price movement? Is there a sense of elevated expectation or caution baked in?
Right. Looking at the market signals, current at-the-money options, they do imply elevated volatility for this earnings event. Implied volatility, or by V, is running around 30% right now.
And how does that compare?
Well, it's kind of in line to maybe modestly above Accenture's historical average for earnings periods.
Yeah.
So yeah, a bit elevated. The options market consensus seems to suggest an implied move of approximately 4 to 5% for the event window.
Okay, so traders are betting on a move of roughly that size, up or down.
That's what's priced in, yeah.
That gives us a potential range. Now let's play out some scenarios. What would a really positive or, bullish outcome look like for Accenture? What needs to happen for the bulls?
Absolutely. Understanding the potential outcomes is key. So the bullish case, that would involve an upside EPS surprise, maybe a revenue beat, or ideally both. What could drive that? Maybe an unexpected improvement in that consulting demand we keep talking about.
The weak spot potentially strengthening.
Exactly. Or maybe really strong adoption of their AI solutions hitting the numbers. Excellent cost control would help too. We might also see new cloud or digital contract wins that are just outpacing any macro drag.
Right.
Or even perhaps a positive revision to their future guidance. That would be very bullish.
Got it. And conversely, what are the potential bearish factors? What could disappoint the market?
Okay, on the flip side, the bearish case, well, that would be if the consulting pipeline shows, further softness. If we see a deceleration in run rate consulting growth, weak bookings would be a major red flag.
Because that hits future revenue.
Precisely. Or maybe a narrowing, or even worse, a cut to their revenue guidance for the future. Also, if macro headwinds really put noticeable pressure on their margins, any of those would be negative signals.
So with all those moving parts, the history, the headwinds, the bull-bear cases, if you had to pick one key metric, the thing to really watch that would give us the clearest signal, what would it be?
That's a crucial question. If I had to narrow it down, the most critical metrics to watch will probably be, first, bookings growth.
Right, the future pipeline.
Yes. And second, the outlook for the consulting segment versus the managed services segments. How are those two performing relative to each other? These will be really crucial indicators of how Accenture is navigating this whole enterprise spending environment. Is the caution hitting consulting hard? Are managed services picking up slack? That kind of thing.
Okay, bookings growth and the consulting versus managed services dynamic. Got it. All right, summing it all up then. What's your overall leaning or maybe confidence score going into this Accenture report for our listener wanting the bottom line sentiment?
My overall leaning is, I'd say, neutral, but with a slight bullish bias if we see those signals of consulting stabilization.
Okay, cautiously optimistic if consulting holds up.
Kind of, yeah. So on a scale of 1 to 10, maybe a confidence score of 6 out of 10. Look, Accenture's strong track record definitely supports the potential for a beat. They execute well. But those ongoing macro uncertainties and the cautious client budgets, they justify moderating that confidence a bit. It's not a slam dunk.
That's a balanced view, a 6 out of 10. For those thinking about this from a strategic perspective, then what are some considerations around this earnings event, especially with that elevated implied volatility you mentioned?
Yeah, what's fascinating, or at least tactically interesting, is that the elevated IV actually presents potential opportunities. For more advanced traders, the ones comfortable with more risk, it might mean premium selling opportunities. Strategies like short straddles or strangles. betting the move won't be as big as implied.
Okay, for the sophisticated players.
Right. For others, maybe looking for more risk-defined ways to play it, strategies like vertical spreads could be considered. Positioning for that anticipated plus or minus 4 or 5% moves, but with limited risk.
More defined risk reward.
Exactly. And look, for those with just a long equity bias, holding the stock is obviously reasonable, but it's probably best paired with good risk management. Just in case we get disappointing bookings or some downbeat guidance, have a plan.
That's a fantastic breakdown. Really offers a comprehensive view of what to watch with Accenture's earnings. It's clear there are several layers here, from their history to the current market mood. Thank you for joining us today as we explored Accenture's upcoming earnings. And for you, our listener, here's maybe a thought to mull over. How might the specific details of Accenture's segment performance, that split between consulting and managed services, and how those bookings look, how might that serve as a bellwether for the broader enterprise tech spending environment? What implications could that have beyond just Accenture? For the whole sector, maybe even the wider economy. Something to think about. Don't forget to subscribe, like, and comment to stay informed. And if you have a company you'd like us to look into, let us know in the comments. Until next time, stay curious and keep learning.